Hey folks, this is Shawn Plummer over at the Annuity Expert. In today's video, we're going to talk about ways that you can withdraw money from your annuity. A popular question that we get from our clients is, can I withdraw money from an annuity? The answer is, in most cases, yeah, you can take out money through withdrawals or income payments, or if you want, you could even do a full surrender. First, let's talk about the annuities that you can't withdraw from. So there are certain annuities out there called SPIAs, which stands for Single Premium Immediate Annuity. There's also DIAs, which stand for Deferred Income Annuities. And these type of annuities require what's called annuitization. And annuitization is a distribution of your income that's irrevocable, which means you lose all control of your money. And in most cases, we don't recommend that. We're not fans of folks losing control of their hard-earned retirement savings. And through annuitization, the only way that you can withdraw money from those type of contracts are through what's called a commutation benefit. And not all SPIAs or DIAs have them. And what that is a one-time get-out-of-jail-free card that allows you to get the remaining money that you've invested into the SPIA or DIA out of the contract and get your money back. But if you don't have a commutation benefit, you can't get your money out. You're stuck with that monthly payment for the rest of whatever the contract terms are, fixed period or for the rest of your life. So getting that out of the way, everything else, 90% of the other annuities out there offer several different ways of getting money out of your annuity. The first method of withdrawing money from your annuity is through what's called a partial withdrawal. And just think about your fixed index or variable annuity as a long-term savings account. And you just want to pull money out each year, like a savings or a checking account, to spend on whatever your needs are for that year. You can do that. You can even automate that through what's called systematic withdrawals. And basically, the fixed index or variable annuity typically tends to offer what's called a penalty-free withdrawal provision. And the standard across the industry is usually 10%. What that means is each and every year, you're able to pull out a certain percentage without any sort of penalty. So to give you an example, if you had a $100,000 fixed annuity and you're allowed penalty-free withdrawals in the first year, and the standard is 10%, you're able to pull out up to $10,000 that year without any sort of penalty. Now, any amount above that $10,000 will be subject to a surrender charge. Okay, so just keep that in mind. And then some folks like to take that out in a lump sum or twice a year. Some like to take that out over a monthly basis, and that's where the systematic withdrawals come into play. Basically, what you do is you call your annuity company and ask them to fill out a systematic withdrawal form, and the insurance company will distribute monthly withdrawal each and every month up to the 10% amount. And you'll continue to get that as long as there's money in the account, or you stop the systematic withdrawals. The more popular way of taking withdrawals is using lifetime withdrawals. So there's this feature on most fixed index and variable annuities called a lifetime income rider, or sometimes called a guaranteed lifetime withdrawal benefit. It's the same thing, different name. And basically what it does is it adds insurance to your retirement savings and your withdrawals. And basically what it says is the insurance company is going to contractually guarantee to give you these systematic withdrawals at the start date of your choosing for the rest of your life, even if the annuity account balance runs down to zero. And the payment is fixed. It's usually the same amount prior to having money in the account or better, okay? So if in the example of having a $100,000 annuity and your lifetime withdrawal is $7,000 a year, you're going to get $7,000 a year each and every year. And when the account runs down to zero, the annuity is contractually guaranteed to pay you that same $7,000 until the day that you die, or you and your spouse's lifetimes, depending on how you have it paid out. All right. There's some other ways to withdraw money if you have need to go into a nursing home or assisted living or home health care. Most annuities have what's called health-related waivers, which basically waive surrender charges in case you need to go into a nursing home or some sort of long-term care facility or service. Sometimes there's a return of premium feature, which allows you to get your money back any time of your choosing in the contract. There's accumulating penalty-free withdrawals, which allow you to roll over your penalty-free withdrawal from the year prior. The analogy I use in that scenario is old school cell phone minutes. So if you didn't use your cell phone minutes in the 2000s, it rolled over to the next year. And then there's some bailout provisions in case something, a rate or a cap renews. So there's several different ways that you can withdraw from your account with any sort of penalty and still leaving the annuity contract intact. So if you have any questions about your annuity or need help or finding the best way to withdraw money, the most effective way, feel free to contact us at the Annuity Expert. Just go to your favorite search engine, Google, Bing, Yahoo, type in the Annuity Expert, will pop up, and then you can contact us, phone, chat, email, phone number 770-755-1565, and we'll answer any questions that you have, and then like, subscribe, and we'll check you out on the next video. Thanks.